Hello, ladies and gentlemen, Greg Michalowski from Forexlive.com. This is Morning Forex Technical Report. Today's date is January 11, 2023. In this report, I'll take a look at some of the technicals that are driving the markets and hopefully kickstart your trading for today. So let's get started. Before I take a look at the euro versus US dollar, let me remind you that the CPI data in the US is going to be released tomorrow at 8:30 a.m. That's going to be a key release for the week, folks. And the expectations are for 0.0 for the headline number, 0.3% for the core measure, that's ex-food and energy. But what we heard this week was Feds Daly, the San Francisco Fed president, is focused on the service sector PMI, less housing. I did a post on that yesterday. Sifting through the data that I was able to find on the St. Louis Fed page. And what it shows is that the headline CPI started to come down in June of last year. That's the basic overall CPI data year on year. But the service sector PMI ex shelter didn't start coming down until September. It has been down for the last 2 months. We'll see how that progresses in the new calendar month when it is released tomorrow. So that's a background for that CPI data. Again, it'll be released tomorrow at 8:30 a.m. ET. Now let's get into the euro versus US dollar. And ahead of the CPI data, the market has been consolidating in a very narrow range right through here. I meant to put a box around that, but this range has taken the price from about the 107.10 level all the way up to 107.63. That's only about 53 or 54 pips from the low to high over the last few trading days. That's not a lot of pips. The average over the last 22 trading days is somewhere around 92 pips. That's per day. So we've seen this range here for now two and a half days. So the market is just waffling along, trying to buy time until we get that CPI data tomorrow. On the top side, we're going to need to get above the 107.60 level. On the downside, we need to get below the 107.12-ish type area. The low from yesterday went just a little bit below that level, but that level corresponds also with this high price from the end of December, which is increasing the level's importance on the downside. If we move below that level, it's going to likely move the price down toward maybe this high right through here, this area right through here, which is around the 106.94 level. Start to move below that level, and we start to look toward this swing area in the rising 100-hour moving average. That's the blue line in this chart right here on the downside, and that's what we would look for on further selling pressure on the top side. Move above these levels, and if I go to the daily chart, and we start to move into this area here, where we had some key swing levels going back in time to February and March and April through here. Then we fell below the level in the month of April and returned to it in May and June through here before rotating to the downside. So that this area right through here where the high prices have come in over the last 3 days is key. If we get above the 108.05 level, that would be more bullish here for the euro versus US dollar. Be aware of those levels. So let's take a look at the dollar versus yen, and we'll start off by taking a look at the hourly chart. And what we see on the hourly chart is that the 100-hour moving average was stalling the rallies over the last few trading days. You can see it here, and here in early trading. We did move above it earlier in the London morning session and fell back below, but we're back above that 100-hour moving average, currently at 132.54. And trying to get above the 38.2% retracement of the move down from the high here in mid-December to the low that we saw in the beginning of January. That level comes in at 132.81. Get above that level and stay above that level is what the traders will be looking to confirm. The break above the 100-hour moving average and start to have traders looking for further upside momentum for this currency pair. So watch the 132.81 level on the top side, and on the downside, watch 132.54 for the dollar versus yen. Let's take a look at the sterling versus US dollar, and this currency pair is trying to break or make a play below this swing area. This swing area has a number of different highs through near the 121.11 level to 121.26 level. That's a nice little ceiling. Then we came up to the ceiling, tried to stay below it here, but couldn't move back above it. And then we came back down and started to test the old ceiling, which then became a floor. And then trading here today, as you can see, the market did try to move below that level, and we're currently trading right around the 121.11 level, right to where at the low of this. So if we start to move below that level, we'll start to look toward the 100-hour moving average and the 200-hour moving average on the downside for the sterling versus US dollar. I want to take a look at the dollar versus Swiss franc next. And if we look at that on the hourly chart, we see that its currency pair is testing and breaking through its 100 and 200-hour moving averages. That is a shift to the bias to the upside here, seeing big moves to the upside here in the dollar versus Swiss over the last couple hours of trading. And that is taking the price above the 100, 200-hour moving average and currently testing or looking to test the 50% retracement. So as long as the new risk level for buyers now who have the more control is the 100 and 200-hour moving averages, we'll see if that level can hold support now going forward. The price was trading a lot of its price action in between this area through here over the last 3, 4 so trading weeks. We did have moves to the upside here on the breakouts that failed and started to move sharply to the downside after the employment report last week and continued on Monday's trade. Now we're seeing a rotation back to the upside with the 50% retracement being tested as we speak. So that's the dollar versus Swiss. As our final currency pair, let's take a look at the dollar versus Canada. And trading this week, the market came down, tested the 50% retracement of the move up from the low that we saw here in August to the high that we saw we reached here earlier in October. That 50% retracement comes in at 133.52, and the market came down to that level in trading on Monday and found support buyers against that level. And yesterday we started to move a little bit to the upside. And here today we have a more narrow trading range as it sort of waits the CPI data tomorrow. On the top side on the daily chart, looking ahead, we do have the 100-day moving average, which was broken on Friday of last week. That was the first break and close below the level, going all the way back to these days in August. So staying below the 100-day moving average is going to be key going forward for this currency pair. On the downside, getting below the 50% retracement is also key from a technical perspective. So right now, the buyers and sellers are battling it out in the dollar versus Canada between 100-day moving average above, 50% retracement below. There you have it. My name is Greg Michalowski. Good fortune to trading. Bye-bye now.